Good day, family, and welcome to today's episode of the Market Compass. Happy New Year to you guys. It's been a while, right? And welcome to 2026. It's our year of increase all around, and I know that there's so much in stock for us this year. So much in stock for us this year. And it's a blessing, I can feel it already. The year started very, very well for me last week, and and I know that is how it's going to be onward. We are in for something great. We did great last year. We're going to do even better this year. So I won't waste much of the time. In this particular video, I'm just going to be analyzing the few charts, forecasting what I potentially I'm looking out for to trade this week. All right, so a quick one, let's take a look at what we have for the fundamentals. We have major news release. I have my settings at just the red folder. I don't, as you can see, I was able to filter it from here. And I don't bother myself about the low economic calendar or the low impact or medium impact. I'm only concerned about the high impact news, because those are the ones that majorly affect or move the market. All right, so for this week, we have from Monday, 4 p.m. Nigerian time, we have USD news, ISM, manufacturing PMI. We have no news on Tuesday, no major news on Tuesday. On Wednesday, we have 1:30 a.m. AED CPI. On 2:50 p.m., we have USD, ADP, NFP, NF, non-farm employment change. Then 4 p.m., we have the ISM service PMI. All right, so service PMI and manufacturing PMI, two different things nonetheless, but that we're not talking fundamentals here now. Then on Thursday, we have by 8:30 a.m., we have the CHF, the Swiss franc CPI. 2:30 we have USD. And on Friday, we have the almighty NFP by 2:30. And by 4 p.m., we have USD related news. Just a moment, guys. So, all right, these are the news that we have for the week. And let's now just be very much careful while going into the week, all right? News trading is not bad, but you want to trade with edge, you want to trade in alignment with structure, you want to trade correctly, and you want to make sure that you utilize them or you want to make sure that they are all aligned with other variables so you can make the most out of them. Be careful, because sometimes news trading can also disrespect your SL or your TP. It's a good one if you shoot past your TP, but then leverage what do they call it, slippage now, it's bound to happen during this period. So you just want to keep that in mind to avoid unknown or often seen circumstances. So you just have to be aware of that. It's something that I check every single week. It's something I check every single trading day before I even place a trade. I always try to time my entries around them and know how best I can leverage with that. All right, so straight into what we have. These are the core assets I trade. And this year, I'm going to be focusing majorly on the JPY, which is specifically GBP, JPY, USD, JPY. I'm going to trade the stocks. In short, I'm going to have more on the stocks. If you should place them based on hierarchy, the stocks are going to be my major focus. Then after the stocks, I'll have the majors and then the USD and then GBP, JPY. Obviously, the USD, JPY is under the majors. All right, so anything that has to do with the dollar index. So you have the Euro, USD, GBP, USD, USD, JPY. I'm going to really be trading them this year, and that will be the second most traded asset for me this year. Why the most traded asset for me is going to be the stocks, which is the US 30, NASDAQ, S&P 500 with the German 30, the German 30 index. Then metals, commodities, just a little here, a little there. I'm not really going to be focused on that. It's just majorly swing trading that I might be taking on that. So in this particular video, normally I would create videos individually for some of all these assets, but in this particular video, and it might be long. I may just have to look at as many assets as I can look at, all right, that I'm potentially having something cool for this week to trade. Now, I want you to know that one of the best things you can do for yourself as a trader is to build a bias for a week. I said about to enter a week. Once you can correctly build a bias, all right, all you have to do left for the week is to just wait for that your bias confirmation and alignment before you engage. All right, so you build a bias. This is what I'm expecting in this asset for the week. If it's a bullish bias, if it's a bearish bias, all right, and you stay with that. Don't trade as much as possible this year. I've looked at my data from last year, and as much as possible this year, don't trade all those buy to sell signal stuff. Okay, let me buy to this point of interest and look to sell. Just save your money. Once you have a weekly bias, allow price to come into your point of interest, allow the alignment and the confirmation to present, and then you execute only in the direction of that bias. Obviously, when defining it, I'm going to share 6 major questions that you can ask yourself, or 7 major questions that you can ask yourself when approaching the chart. All right, these are questions. I believe that those who ask the right questions will always get the right answers and also see a change, the desired change they want. All right, so if you are going to be trading this week, once you build a bias in the week, just stick with it. All right, so I have my bias on some of this asset, and that's all I'll be interested in. So the asset that I'm looking to buy, I'll buy only. The asset I'm looking to sell, I'm only going to sell. All right. So, and then for me, when it comes to bias building, my very best time frames for building or defining my bias is the monthly time frame, the weekly time frame, and the daily time frame. Then for confirmation of bias, that is alignment and confirmation of bias is the 4-hour time frame. I majorly just use the 1-hour time frame and 15 minutes time frame for entries. I can also use my 4-hour time frame for entries, depending on how I feel anyways, or where the best opportunity comes in. So, but then I majorly use the monthly time frame, the weekly time frame, and the daily time frame for bias building. In short, of recent, I don't even do much on the monthly time frame anymore. Since all I do on the monthly time frame is to define dealing range, just mark out the significant highs and lows before I come down to the daily time frame. You can boycott that whole process. In short, I deal majorly from the weekly time frame and the daily time frame to build my bias. All right, since I'm trading week in, week out, I'm trying to build a bias for the week, and then I will not take intraday trades all for that week. By weekend, I'm having a fresh full analysis again. That is all I'm going to be doing. So I will be beginning my analysis on the weekly time frame, daily time frame, then use 4 hours to wait for the alignment of the bias before I start looking for confirmations to now begin to take my trades. All right, and then I execute my trade on the 1-hour time frame or on the 15-minute time frame. I don't trade anything less than the 15-minute time frame. I always like giving the market room to breathe before I execute any particular trade. All right, so or whenever I execute any particular trade, that is it. On that, and again, I would want you guys to pay attention is time frame price correlation. I do that a lot. All right, time frame price correlation is there are some time frames that are best for some things, and also that there are some time frames that when you conduct an analysis in those time frames, there is another time frame that is best for waiting for evidence. For example, when I mark out points of interest or I draw levels from the weekly time frame, once price comes into those zones, the best time frame I want to wait for the evidence is the 4 hours, not the daily time frame, not the 1-hour time frame. The reason the daily time frame might not give you something too clear because price might not stop there and start moving. You might not see that clear evidence. The 1-hour time frame might give you multiple evidence and you might not know the right one to take. Whereas the 4 hours is just going to be that perfect time frame. So if an analysis is done on the weekly time frame, I'm focusing on the 4 hours. On the daily time frame, I'm focusing on the 1-hour time frame. If it is on the 4 hours, I'm focusing on the 15-minute time frame. All right, so that is my time frame price correlation. So these are the things that we're going to be looking at. And another thing is that I'm a believer that price journey from levels to levels, and at the same time, I'm also a believer that price is moved and attracted by liquidity. Liquidity moves the market. Liquidity moves the market. In short, the market is all about liquidity. See this chart, every single thing, it's all about liquidity. So understanding liquidity, I'm definitely having to record a video. I'm going to record a video teaching on liquidity versus levels, all right, how to use liquidity and key levels together. So those key levels are majorly support and resistance levels and the rest of all that, okay? So liquidity and levels or zones, whatever you may want to call it, support and resistance zones, right? So I believe that price journey from one level to on that level, I'm a firm believer of that. And once you can identify those levels, you can leverage on that. But at the same time, it is one thing for price to come into those levels, and there will also be all those liquidity gain within those levels. All right. Sometimes price will not just tap into the level and start running. They might place some other liquidity gain within, and understanding how liquidity flow with these levels is going to guide you so much. So my model remains the same. All right. Only I became more intentional about liquidity sometime around sometime around October, November, December last year, and it added more beauty to my trading. I've been trading just purely levels, support and resistance, price give me evidence, and I engage. But liquidity also, imputing liquidity with this has more improved my game. In short, it's part of my playbook. And like I told you guys, if you've watched the videos on playbook, the playbook is always supposed to continuously increase, improve, and it should be refining. Then you continue removing the things that you don't need and holding on to the very core. That is how it is. So by the time you now see somebody who has built a playbook for over a year, 2 years, or over 3 years of charts, data, and the rest of all that, you realize that the playbook becomes stronger. So my early playbooks, there were some things that were there that were important as a then that to me now I count is no longer really as important as, like, for example, based on my playbook, I'm not so much interested in monthly time frame anymore. There's some other few things like the engulfing candle moves and a few other stuff I'm not so much interested in that. There are other things that are much more important, much more safer for me, has more edge, has more statistics or in favor compared to other models. So models, I mean, is like my playbook models, not any other. I don't go around learning strategies here and there, right? So those are the things that I focus on. So my playbook is improved and it has gone from version 1.0 to version 2.0. We are still solidifying. The more I gather data, and the reason why the liquidity came into play was as I was gathering data on my stuff, I realized that at some point the manipulations were much. So I told myself that, look, okay, if this is a game of liquidity, I need to understand this very well. I studied liquidity, same model, but just adding liquidity to it. Oh, it turned the game around for good. So I kept on improving. Now I'm refining my edge. I'm becoming better and the rest of that. All right. So I've said too much around about that intro. Let's dive right into the chat. I might not analyze all the assets because every single day from Monday to Friday, morning, afternoon, we're going to be having that London, New York session. As much as possible, it's going to be consistent by God's grace. So I look to every single morning by 8 a.m. and in the afternoon by 12. Is it 12 now or 1? I'll let you guys know in the comments. I think it's going to be mostly by 1 p.m. We are going to be having that New York session. All right. So having said that, you stay close to that. All right. So this is part of the trades or some of the trades I took last week. I had these 1 to 3 trades. 1 to 3 is my major fixed RR. 1 to 2 first target, then 1 to 3 second target. If I now have long sweep at 1 to 3, I'm already taking off partials. All right. So this was one of the trades we took or I took last week on gold. So it's a very much decent trade. So I'm just going to be deleting it now. And another one on US30. I won't be deleting that on US30 because I'm going to be holding this till it has gotten to 1 to 3 already. I'm looking at it getting past this level. So I'm in on this trade and I just want to hold it and see how far we can go with it. All right. So let's dive right into the chart analysis proper. So for this video, I will begin with the dollar index. All right. So the dollar index, I want to start with the weekly time frame. Now, all I'm trying to do, these are the major questions I ask myself whenever I want to conduct an analysis. All right. I believe that once you ask these core questions and you can answer these core questions, you're good to go. If you can't answer them, these are the core questions that forms my checklist. If you cannot answer them, then there is no point you attempting to take a trade yet. All right. The very first question is, where is price drawn to on the higher time frame? So you're trying to understand where exactly is price going to on the higher time frame. Where could price potentially be drawn to on the higher time frame? Now, this question of where is price drawn to, it can be determined by, you can answer that question through market structure. You can answer that question based on draw and liquidity. You can answer that question based on support and resistance levels. Whatever model, you can also answer that question based on fundamentals and sentimental analysis, right? The commitment of traders report or any other forms of analysis, fundamentals that have been released. You can answer that question, but any method that they are using to answer the question, any strategy at all you are using, the very first question is, where is price drawn to? Once you can identify where price will potentially go to, then you can always find the bus stops to wait for. Let's say it's more like this. Let's say you're traveling from point A, all right, to point B. And you know that, okay, fine, that this particular train, maybe you're going with the train, is definitely heading to point B. And you missed entering the train at point A. There are different other junctions that you can easily predict that this train is going to come to, where you can always join the ride still to arrive at point B. So that is exactly what trading is all about. You're trying to identify where could price be potentially drawn to, where can we see price potentially get to. You can use any method that suits you to answer that. Once you have been able to answer that, the next question you want to ask the next question you want to ask yourself is that what liquidity has not been taken out yet? All right. So which liquidity or which levels are yet to be mitigated from? All right. Which levels are we yet to mitigate from that price could potentially come to carry or to where you can find your entries around, or maybe price will take those liquidity first before going off. In a separate video, I'm going to teach about internal liquidities and external liquidities and other forms of liquidities, sessional liquidities, and how you can use them in your favor. All right, these are the three major liquidities for me. Okay, aside the weekly and higher time frame drawn liquidity, I don't joke with internal, external, and sessions in the liquidity. They are very, very much important. So if you can identify those internal liquidity or sessional liquidity that price is here to take, it could help you know that, okay, yes, in so much we are going to these higher targets, we will most likely come down here before we start going all the way up. The next question is, are you in premium or are you in discount levels? Because you want to always be selling at premium and buying at discount. And then the next question is, what structure confirms or invalidates my bias? So if you have a bias, for example, for the week, maybe on the DXY, I want to buy DXY. What will I see that will confirm my bias for the week so I can stay in that course throughout the week, so that all through the week I'm buying DXY? And also, what is also that thing that if it should happen, we invalidate this bias so that, okay, I might be bullish on DXY from Monday and Tuesday, but if so thing happen, it invalidates the bias. I will no longer be bullish. I will now be bearish on DXY. You want to be able to answer those questions. Next is that you want to be able to answer, okay, where is the cleanest 4 hours point of interest aligned with the drawn liquidity or the higher time frame drawn liquidity and the bias you have, and what liquidity am I trading from, and also am I trading to? All right, there's always that from and to, or from and to liquidity game that happens. And the last question is, what are my quarter point levels? Okay, this question now is peculiar to me. Others, the first 6 questions I mentioned is related to anybody, but this last question is peculiar to my model, which says, what are the quarter point levels saying in all this? Because I still believe that price journey from one level to another level, and I use the quarter point model very, very well for that. So having said that, the very first question is, where can I say price is potentially headed to on the dollar index? One sure fact is that, okay, yeah, on the dollar index, I believe that based on the weekly, as you can see here, we are bullish. All right. Overall, we've been having this bearish move, but similarly now it looks as though we have some very, 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 very clean bullish attraction here after this weekly break. If you turn to line chart, you see the weekly break there, right? So after that weekly break, we've been seeing higher lows, higher highs, and potential new higher low that could attract price to the upside, and that is it. So I'm potentially bullish on the dollar. There are some other sentiments also, market sentiments, that is calling for bullish price action, which time will not permit me to go into. So, but then these are the things I'm going to be looking at. So I'm potentially bullish on the dollar. We even have some liquidity resting all the way above, but that liquidity is far. All right, that is not the liquidity I'm looking at for, because I don't believe that in 1 week, except maybe what happened sometime in April 2025, the first week of April 2025, or the first week of March is about to happen again, right? Where you have all these big, massive drop, and they are majorly bearish candles. All right, unless that is going to happen, I don't know if one weekly candle is going to buy all the way to this upside. So I'm looking at low-hanging fruits. Yesterday or sometime this week, or last week, I was explaining to my students on the concept of low-hanging fruits. All right, these are easy liquidity targets that you want to always aim from. Easy liquidity targets, and they are good to be drawn on any time frame, whether it is monthly, daily, weekly, 4 hours, any time frame at all. And the logic behind low hanging fruits is this: if you have a mango tree, right? There is a mango tree, and you are trying to harvest the fruits in those trees, and all the fruits are ripe. All right, all the fruits are ripe. Would you, as a harvester, start aiming for the fruits way on the top of the tree, or will you start getting those ones that are low hanging that your hand can easily reach to? Where will you start from? I don't think anybody is going to start stressing himself looking for the one at the very top when they are the ones easy, all right, that your hand can just easily reach. You pluck it with your hands and put it into the basket. Those are low hanging fruits. All right, so in that particular case, when defining my weekly bias, once I look at maybe the overall structure and the rest of that, I'm also now looking at where could price be drawn to. In this particular case, I know that price is most likely going to be drawn to these levels. All right, even if not that levels, we have these previous weekly highs here. All right, that price could also be drawn to. So for me, I want to start with this easy target. After this target has been met, I can as well forward to other targets. We have some imbalance here. So price is a liquidity game and an imbalance game, always seeking to capture liquidity and rebalance price action, journeying from one level to another level. That is my philosophy, all right, on price. So we have this liquidity. If they capture it and capture these highs, I know that, okay, we might be going for this gap or even these candles here, since we're overall bullish. Now, that is one of the liquidity targets. if we're going to be buying, I don't want to see price go below these lows. I also don't want to see price go below this candlestick lows. Why? I will explain it in a separate video for the want of time. All right. When I'm talking about liquidity, weekly drawn liquidity, and liquidity versus ranges, I will explain this properly. All right. But I don't want to see price go below that low. If we're going to buy, price should not come below this low. The worst that price should be able to do when selling is that they should just maybe attempt to capture previous weekly lows. All right. They can attempt to capture previous weekly lows, and then we'll start buying all the way to the upside. All right. So the main target for liquidity for me is this highs. All right. And I don't want to see them go below these lows. Worst is that they can come just below here to sweep it and start going. Then after defining that, I come down to the monthly time and to the daily time frame to observe market structure. Now I know that market structure on these guys is bearish. All right. The market structure is bearish. So I believe this should potentially lead us to a new break that would lead us to more bullish price action on these guys. I'm not forecasting any bearish price action here. And if you look at another DXY or this, that was capital.com, but if you look at TVC, you realize that we got a daily break somewhere around here, but then we got a daily break somewhere around here, but then there was no clear internal liquidity to capture. So price decided to use this. This is my own belief that price is using this external range as its internal range liquidity before they start buying. When we start talking about all the liquidity types and all the liquidity forms, you understand that some external liquidities can also serve as an internal liquidity in the absence of any viable or visible internal liquidity. So that is why I believe, okay, price just came here to capture after this break to now start moving all the way to the upside. So we are heavily bullish on these guys, right? We are heavily bullish on these guys. And please, you permit me I don't want this video to be too long. So I will talk on the dollar index. I will not necessarily talk on Euro USD and GBP USD. So you know that if we are buying the dollar, that means we are selling EU and we are selling GU. All right. Once we are buying the dollar, if we are going to be buying the dollar, then you just know for sure that we're going to be selling EU and selling GU. So with this information, you can correlate it to that asset and make the most out of it. If you need more analysis, then be in the London session tomorrow. All right. In the London session tomorrow, when we meet, we'll now be talking about the EU, the GU, and how to take our entries from there so as to make the most out of it this week. All right. So having said that, I know that we are definitely heading here. Question is, where could we now begin to watch? All right. I might want to watch out for price action either below these lows or these lows, and maybe some levels right here, and we can start buying again to the upside. But in this case now, this is now to answer the question of which liquidity has not been taken yet. We have this liquidity that is yet to be taken out. All right, but we also have some internal liquidity that is yet to be taken, although they took this one. So maybe this liquidity might be standing to start going all the way to the upside. All right. So, and if you look at that range, turning to line charts, you realize that our range is going to span after this break, higher highs, higher lows, higher highs, higher lows, and higher highs. So we have more like this range to this range. So price might want to come just respect that lows to start going all the way to the upside. Also seeing to the fact that we have cleared some liquidity here, so they might want to respect this one. If that they had not cleared it, that means they might have come for this to start buying all the way to the upside. But in addition to that, all right, another thing again that I want to do, structure has confirmed it. All right, we already have that structural confirmation, and I told you guys that if the only thing that is going to invalidate this trade is that if price sells all the way to the downside here, and they don't give us a clean evidence to engage, which is going to be an evidence of accumulation, then there will be absolutely no reason to engage in this trade. You might just as well see price sell off from here. So these are my invalidation levels. First, these lows, and next, these lows. As long as price don't invalidate those levels, I'm heavily bullish on this asset. All right. Then for my 4 hours points of interest, I've been able to mark out a few. We have here for 4 hours points of interest to go up, or we have some levels right here for price to come to start going all the way up. All right. Now, the next thing now I want to confirm is this model with my quarter point levels. So what does the quarter point level have to say with all this? So if you look at the quarter point levels, let me see the daily time frame reaction. You realize that we have some major areas of support and resistance here. Let me go down to the 4 hours for more clarity. And let me scroll to the 4 hours time frame. Now, if you look at these levels right here, you see that in the past, these zones has served, based on my quarter point support and resistance model, this zone has served as a serious zone for support and resistance in the past. You can see how we tapped here and had got a serious rally, even some of the major sells that happened here and the rest of all that. So we are reacting just from that particular zone. So if at all they want to capture these lows, there might be that chance of price coming in here maybe during the course of this week, just to tap into this level again for us to start seeing that buys to the upside. All right, so if we can get that, that would be beautiful. But are we paying attention, like I said, to these lows and these lows? Anything beyond that, that is an invalidation. If Monday and Tuesday sells below this, I'm no longer going to be interested in bullish price action. My bias is going to instantly switch to being a bearish price action. All right. So having said that, I just want us to keep an eye on these guys on the DXY. Let's see what we'll get on Monday. Let's see what we'll get on Tuesday, and then we can easily utilize that opportunity. All right. So that will mean selling opportunities on Euro USD, selling opportunities on GBP USD. Same thing. All right. My analysis before is that I'll go from monthly, Monday daily range, daily structure. I combine it with what I have in the quarter point levels, and then I now wait for my evidence. I begin to engage. Same thing, but now with the inclusion of liquidity concept. All right. So quarter point level, support and resistance levels still play my major role. Daily structure is still playing its roles. Then just I added liquidity. Once price comes to my point of interest, that is when I'll start using my DRC model. All right. My DRC model L3 of the rising or falling tree or any of all that. So either the rising or falling tree method and or the morning or evening star method or any other method. I also have the, what are they calling it? I also have the wedge pattern. All right, it's part of it. And DXY last week gave that typical wedge pattern. That's another thing that struck me. I think this is the rising triangle pattern where price is just giving a rising triangle with a static support and resistance. So you see that there were many support and resistance and rising triangle. Price broke beyond it and they continued buying. So it's an entry model based on my playbook. And when I saw that, it's added confluence to it. All right, so there is a systematic approach and a checklist I use when conducting this analysis that helps me to know that, okay, this is what is obtainable or this is not what is obtainable. All right, so I'll keep a close eyes on that, on the dollar index. You know what? Let's just so as to make this video not too long, we'll focus just on the dollar index. In our session tomorrow morning by 8 a.m., we'll be looking at the Euro USD, GBP USD, and the USD JPY. Then by New York session, we'll also touch the US 30, NASDAQ 100, and we'll see what we can get. As the week goes on also, I'm going to be releasing videos here and there on my view and the daily trading compass on what I have for each of all these assets. So stay safe, trade safe, clap easy, and don't blow your account. All right, trade safe, clap easy, don't blow your account. It's a new week, it's a new year. You just want to wait for the market. Be very, very much patient with your trading this year. All right, be very, very much patient. A lot of free educational stuff are going to be coming to you. I will most likely be running an open mentorship. All right, so a lot of values will be coming to you this year. So stay close and stay tuned to my YouTube channel. All right. So as you're watching, please do well to share. Hit that like button. Send in your questions in the comment sections, or as well, there'll be a link to my private Telegram channel or my public Telegram channel. You can also use the link. You join the Telegram channel. More updates will also come there, like progress reports on the analysis we've been doing. I'll be sending them into the Telegram channel, and that is one of the ways that we can also interact on a daily basis. All right. So if you go through my channel, also you said I've been releasing some psychological videos that will help you scale properly this year and make the most of the year. So do well to watch those videos, engage on them. All right. If any questions, you can drop them in the comment box. I will definitely reply. And if anything you want me to cover, you also let me know in the comment section. I will definitely reply. We're going to be having some frequent contacts. Do well to also participate in them. Maybe even if it's 2 contacts in a week, aside the London sessions and the rest of all that, we'll be having some trade study sessions. All right. So we are going to be teaching my model in full and the rest of all that. So do well to participate. It's completely free. And you don't want to miss out on preparing and building the right foundation for 2026. January is a very critical month. You don't want to go about wasting it. All right. Let's make the most out of January and see how far we can go for this year. So having said that, I think that will bring us to the end of this particular session. Thank you all for staying true to this very time watching. I love you all. I respect you all. and I will see you in the next one. Cheers to greatness this week, and shalom, shalom. Bye, guys.